Hi everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world, and sometimes companies are like those people who throw a big party then suddenly declare bankruptcy. It's always a wild ride. Let's dive into Benson Hill's latest filing and see what's cooking. So Benson Hill is basically telling us everything is going south and they don't expect to file any more reports unless a bankruptcy trustee says so. That's a pretty clear signal that they're throwing in the towel on their current way of doing business. This is a current report, which means it's about some important sudden events happening with the company. The exciting developments we're talking about today started really heating up around September 2nd. The company we're looking at is Benson Hill Inc. They are incorporated in Delaware and have a file number with the SEC. Their main office is in St. Louis, Missouri. Their stock used to trade under the symbol BILL on NASDAQ. Now here's where things get really juicy. NASDAQ suspended trading of their common stock back in March of 2025. That's a bad sign. It means they couldn't meet the requirements to stay listed on a major stock exchange. And to top it all off, NASDAQ is officially delisting them. This is the final nail in the coffin for their stock being traded on that exchange. It basically means the stock is as good as gone from a major market. Benson Hill is calling itself an emerging growth company, which is common, but in their situation, it's a bit ironic given what's happening. Okay, this is the main event. Benson Hill and a bunch of its subsidiaries filed for Chapter 11 bankruptcy back in March of 2025. This means they are trying to reorganize their business and debts under court protection. They've been operating as debtors in possession, meaning they're still in charge, but under the watchful eye of the bankruptcy court. So as part of this bankruptcy process, they previously sold off pretty much all of their assets. This was done through an asset purchase agreement with a group of buyers. This asset sale happened in May and they sold off almost everything. So what's left? Now they've decided that trying to reorganize under Chapter 11 isn't working. Instead, they want to switch to Chapter 7 bankruptcy. This means they've officially asked the court to convert their case from reorganization to liquidation. There's a court hearing scheduled for later this month to decide if this conversion to Chapter 7 will happen. If the judge says yes, then by the end of September, Benson Hill will officially be in Chapter 7 bankruptcy. What does Chapter 7 mean? It means no more business as usual. A trustee will be appointed to sell off whatever remaining assets the company has and use that money to pay back creditors. And here's the kicker for investors. Benson Hill is pretty sure that if this liquidation happens, there will be absolutely nothing left for shareholders. They believe the shares are worthless. That's about as direct as you can get. This section is about leadership changes. Daniel Cosgrove, who's currently the interim CEO, will stay on until a bankruptcy trustee officially takes over. Once the trustee steps in, Cosgrove's role will end and he'll no longer be an officer or director. This is standard procedure when a company goes into hard liquidation. This is a bit of a catch-all for any important information they need to share with everyone at the same time, to be fair to all investors. They're essentially saying that because of their dire financial state, they won't be filing regular reports like 10Ks or 10Qs anymore unless the Chapter 7 trustee decides it's a good idea. This is another clear sign of the end of the road for them as an active reporting company. They're reiterating that shareholders are not going to get any money back. So if you own Benson Hill stock, it's pretty much worthless. They point to a website where you can find all the official court documents for their bankruptcy case. Now, this part is where they usually cover their bases with legal disclaimers. They're talking about forward-looking statements, which are essentially predictions about the future. Since they're heading for liquidation, these statements are all about the risks and uncertainties of that process. They're highlighting that what they're saying might not exactly happen as predicted because a lot can go wrong in bankruptcy court. They list a bunch of potential problems like how the bankruptcy affects everyone involved, what the court might decide, how long this whole ordeal will take, how it impacts their cash and operations, the costs of lawyers and advisors, and even how it affects their stock price. Basically, they're saying bankruptcy is messy and unpredictable. And they're also saying they don't promise to update these predictions if new information comes out unless the law forces them to. Pretty much, we're done here, don't hold us to anything. This section just lists any extra documents attached to this report. The main exhibit here is the actual motion they filed to convert their case from Chapter 11 to Chapter 7. This is the legal document that starts the process of shutting down the company for good. Finally, we have the signatures. This just confirms that someone authorized within the company has signed off on this report. And here we see the signature of Daniel Cosgrove, the interim CEO, signing off on this report. The report is dated September 3rd, 2025, Zexthot. So what's the story here? Benson Hill was already in Chapter 11 bankruptcy, and they've now sold off all their productive assets. The kicker is they've requested to move to Chapter 7 bankruptcy, which is effectively a surrender and a liquidation. This means the company as we knew it is ceasing operations entirely, and there's virtually no hope for any shareholders to recover their initial investment. It's a classic case of a company struggling, trying to reorganize, but ultimately failing to find a path forward, leading to asset sales and a final shutdown. Looking at this from a broader perspective, Benson Hill's situation shows the tough reality of the agricultural tech sector. They were trying to innovate, but the market or their business model couldn't sustain them through the bankruptcy process. The delisting from Nasdaq and the move to Chapter 7 are definitive indicators of failure. They couldn't generate enough revenue or attract enough investment to keep the lights on, especially after their assets were sold. The risks they mentioned, like bankruptcy court rulings and mounting advisory costs, clearly played out negatively for them. In terms of direction, the company's direction is clear. Liquidation. Their strength at this point is non-existent in terms of ongoing business operations. Their weakness is absolute. They are failing. The most notable risk is exactly what's happening now. The complete loss of shareholders is gone. My conclusion is that Benson Hill Inc. as an operating entity is finished. Investors who held on likely saw their investment evaporate. It's a stark reminder that even companies with fancy technology can face the harsh realities of business and bankruptcy. Alright, that's our breakdown of Benson Hill's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.